Good afternoon. Today is the 4th of May and I'm hosting a second session with the leaders of the private equity of the Big Four in Luxembourg. So welcome back to those who are here. Welcome back to Laurent, Vincent, David and Nick.
Hi, Angela.
Hey, welcome back. So we were speaking here on the 2nd of April and I can't believe a month has passed by. Thankfully in private equity things don't happen that fast. But we are here for just a short catch-up of 30-40 minutes with the audience who have seen a lot of news coming through the different news channels, and we would like to get your updates on this. I want to share a number of developments from our end. This recording is not public, so it's only for participants who register. So if you want to share it with other colleagues, please ask us. Second thing is, since last time we met, we held about 20 online events. Which are all to be found, or most of them to be found on our YouTube channel. So please subscribe to follow us more systematically. We also conducted a survey since we last spoke with the Big Four leaders among our members, and actually the feedbacks were quite positive from our members, feeling confident about how to handle the contingency planning. So I'm very excited to hear more from our Big Four partners. And last but not least, we had the 3 giant PE firms in the names of Apollo, Blackstone and Carlyle release their quarterly earnings in the last week, all with NAV declines between 8 and 25% depending on the strategies, but all feeling quite confident long-term because of the cash sitting on the sidelines, while being very cautious in terms of the stances and the guidance that they will provide the investors and the public in the meantime. So I'm very curious to see if our leaders are aligned with this. We will have a 3-part conversation, a little bit like last time. First one is looking already at the light on the horizon and trying to find silver linings from our Big Four partners. The second one is to try and hear from them whether there have been key developments now that the Q1 2020 NAVs were released. And last but not least, a little bit of feedback from them on the Luxembourg scene, because we've seen the government stepping up, the regulators stepping up. I mean, there's been quite a nice coordination between the public and the private sectors in the last month. And before we start, last time, I don't know if you remember, but we had a little bit of a musical introduction. And I would like now our musician-in-chief in the name of David Capocci of KPMG to continue with a very short musical introduction, but I'm not sure I agree with his choice because he's going to play Zombie, not that he is a zombie, by the Cranberries, and this is just a very short thing to warm you up. Go for it, David. David. Oh, can't hear you. So the zombies, not too much. So the zombie is dying, which is good for us.
Dying, exactly. Sorry for that.
I mean, do you agree, guys, that we are in zombie territory? Tell us, after 2 months of confinement. Nick, how are you? You can start. Last in, first out.
Last in, first out. Thank you.
Yes.
Are we still in a zombie confinement, or are we going back? I mean, I think it's we're starting to see the light at the end of the tunnel. Maybe not on all the things, but at least on getting things back to a new normal. In that respect, I think we've all got used to working from home now and doing business as well, being away from clients and not meeting physically. So I think that's a big change that we have all in some way seamlessly adapted as well. And I think it's a positive sign out of this crisis. I think we should carry forward as well.
Yeah, Nick, last time you said that the advice to GP was pick up your phone and call all your investors. So have you picked up the phone and called all your clients in the last month? Have you spoken to all of them?
I've spoken to quite a few of them. All of them, I'm never too sure, but a lot of them on a daily basis in that respect. Yes, and to see how they have adapted or not to the current situation.
So Vincent, do you agree? Are we moving, as Nick says, from contingency room to recovery room in private equity?
Yeah, hi everybody first. Yeah, I would tend to agree, even if
let's say the deconfinement, the procedures and the timing of it is still a little bit unclear. But yeah, at least as Nick said, there is some more light. The horizon is a little bit more visible than a month ago, and yeah, that's great news, I would say.
Mm-hmm. Do you see light too, Laurent? And what kind of light do you see?
Yeah, no, absolutely. I think we see the light, and now the announcement of the loosening of the lockdown is certainly the light that I think we're all waiting for to reestablish the social relationship. I think there is time is going to be very critical, and I do agree. And I think also from each government, we all need to handle it very, very carefully, try to reopen the economy as soon as possible, but on the other end, make sure that we're not making making the right decision in terms of the health situation. I think there's a couple of challenges ahead, though. When we see the GDP numbers that have been released, I think that's something you were asking, Raja, last month. What happened over a month now? I think we see those GDP numbers, and it's quite impressive. I think we haven't lived through this for so long, even during the World War. So finger crossed that it is not going to taint the whole economy, and that there won't be a snowball effect to all that. I think the work from the central bank and the work from the financial institution and all the national stimulus packages, I think will probably help. This being said, I think there's also lots of opportunity, as we said last time, and we will see those opportunity materializing probably now that this light is raising.
But all these lights you're mentioning don't concern necessarily private equity. So David, tell us more specifically, how does this translate with your clients, if you agree with the statements of the colleagues?
Well, yes, good morning first, everyone. Yeah, so I also see the light. The only thing I cannot really confirm is how far or how long the tunnel still is. The light is there with the deconfinement, and now we need also to realize that this situation will be over once all the people, or most of the people, 50 to 60%, get immune from the disease and stop transmission. And this goes only through direct exposure or through a vaccine. So this is the reason why I still have difficulties to really estimate when the end of the tunnel will be.
So the light only means that we got used to the new normal then, although one of you told me earlier that a couple of clients are setting up new vehicles, are launching new funds. Are you seeing this across the board?
Yes. I mean, I've seen clients setting up in venture capital as well as debt funds in Luxembourg, which is a very good news. Now we also realize, and some of our clients, I mean, mainly based in London, their offices are still closed. They are working from home, and they consider that today it's still difficult to make deals because of the environment of remote working, which doesn't really allow them to do all the proper due diligence. So they are really focusing on managing and protecting their current portfolio. This is
sure. So we're still in contingency room, but looking into the recovery room. Now, if I quote again these numbers that the big three listed PE firms have issued, between NAVs down between 8 and 20%, with some funds that are now out of carry, some risk of clawback, as mentioned by Apollo. What about your GP clients? What have they been looking at for Q1 NAVs, and now that they're out? And I know that in our industry, what matters more is post Q2, but please give us some guidelines in terms of what's coming up. Laurent, you seem to be inspired.
Yeah, absolutely. Yes, same feedback here in terms of numbers. We've seen a couple of GP also that have asked their LP to change the strategy. So trying to more go to distress control, special sit and when possible. And I think Apollo announced that as well, together with their earning. This we have certainly seen that. I think the Q1 has been quite difficult, as you said, with the the carried interest. I think I think there's a couple of funds now that are facing this clawback, carried interest clawback, which to be seen how it will develop. Yeah, that's.
And has there been differences?
Yeah, that's exactly what we've seen.
Have there been differences in the different strategies? Maybe Nick, you can comment on this.
Yes, the strategies obviously have borne their fruit in different manners, and I think whereas PE is probably your typical PE is probably suffering at the moment. Your credit strategies are
sorry. Can you qualify what is the traditional PE? LBOs
your buyouts
okay.
Stuff is probably not performing as well as it should be as a result, and some of the Q1 valuations that you have cited have clearly indicated that. But there's a bit of a balance for those that have a different strategy type of investments, where the credit side of the part has helped shore up a bit of the losses that you would see on the traditional buyouts.
So 8 to 20% doesn't shock you, Vincent, either, in the decline of NAVs announced so far by the big guys?
Well, it's more or less in line with the drop on the stock markets, and it really depends in which categories or sectors the different fund managers are invested in. Of course, if they are invested into the sectors which have been the most impacted over the last 2 months, well, clearly a minus 20% in the NAV is not surprising.
Well,
how long will it take to build back the value of those assets?
Mm-hmm. Well, if I take Carlyle, they announced across the board -8, which they say is much better than the market, or MSCI in the same period -23. But they did say that the energy sector was -21%. So it seems across the board 20% seems aggressive, more like 10-15%. And I'm surprised if we speak of venture. David, you said the client was launching a new venture fund. What kind of venture was that, and how do they do this in the current market?
Yeah, they're raising funds, setting up the structure, and looking for opportunities. Cannot go into detail about the strategy, but definitely, and coming back to what Nick said earlier, we see that large deals are probably suffering more. And there was an example in New Zealand where MetLife Care was about to be acquired by EQT for a 1.3 billion deal that was stopped. We are more on the distress type of activities, and not only debt, but also equities. I mean, I have clients working on the acquisition of airline companies for now. So this is really the type of activity.
And the venture, you mentioned venture earlier?
The venture is just, at this stage, is the setting up of the new fund. So I wanted to name it because it's always good news to when Luxembourg is positioned for a new structure. The acquisition has not yet started, but will probably start. I expect it to start within the next 6 months.
Mm-hmm. Okay, so if I asked you to, oui, pardon, sure. Laurent?
Maybe just to interrupt here and to add, I think there's something interesting Vincent mentioned on the drop of the financial market end of March, and now the way the public equity has really recovered, right, over the months of April. I think this is probably a topic to talk about here, and see whether our industry will recover the same pace that the public equity, and overall when you look at those index, there is a lot to do with tech. So I think probably what we can see now is kind of this emergence of two different worlds. On one end, the tech online, retailers, logistics, healthcare, and a couple of sectors that are really on the rise, whereas some others, as you name it, energy, hospitality, tourism, etc., which are very much struggling.
A lot of the analysts that you read about, though, mentioned that this is a bear market rally and that volatility will continue. And from what I saw today, it's back down. Nick, you seem to react to this.
Yeah.
Yes, I think we're in for a few months of significant volatility, because it is going up and down every week as we speak. And I think you mentioned, I mean, going forward, a lot of valuations are based on multiples on earnings, and if obviously the earnings are down, the multiples are up or the valuations are down.
We lost you in the last sentence. Can you repeat it, please?
I don't know where you lost me, so I'll start.
That the valuations are down, and you don't know how this can be.
So a lot of valuations are based on multiples, and those multiples are on the earnings. So if earnings are down because there is no business or there's lack of business over the last few months, that will definitely have an impact on valuations going forward as well. So that is what we have to see. Are the multiples going to stay at the levels they are today? Are they going to go down? Are they going to increase? It's still subjective at the moment, and I think probably Q2 valuations, so sometime in July, in that respect, will give us a bit of a clearer indication in that respect.
Well, this is where you wonder again if the mark-to-market applies to private equity, or if we should consider it a blessing for our industry, that it takes time, you know, before we catch up. And that's why we decided internally to interview you in the next 3 months. So probably we'll see you back in September with a much clearer vision of numbers and lending. But I still want to ask you, because I won't see you maybe for the next 3 months, where would you see the lending of NAV at the end of 2020? If you had to guess it, and we will take bets and the winner will get a present from us.
I think there's a long-term view that the industry takes. And again, it's not being aligned with the spot market. So yes, the markets do have a bearing on valuations, but it is a long-term view that the asset managers do take. So I think that also has a bit of a weighting as well that needs to be looked at.
So David, where do you see the end of year NAV lending for private equity?
Well, I can agree with what Nick said. It's a long-term view, and the issue today is probably that there are a lot of potential buyers, but not necessarily enough sellers, at least at the price they want to make. So my best guess would probably, since I want to win the price, minus 15%, let's say.
Vincent, end of year lending for private equity. Oh, Vincent is frozen there. Oh, we lost you.
He's on mute.
You're on mute. Yeah, voilà.
Can you see me?
Yes, now yes. No.
Well, I think it's a $1 million.
Well, I did tell you, but that's the prize, $1 million. So please go for it.
Okay, good. Now, well, I think it's a little bit premature because let's say the fund managers have done a very hard work to assess the operational and the financing impact of COVID on their portfolio companies. And now they are only looking at the assessments and the impact and trying to monitor to the best extent possible those two risks on the medium and the long term. And let's say quicker the values could be restored. But let's say we know that the world is not let's say fully coordinated. If we just look at Europe, I'm not sure we will have something very consistent. But cautious. But giving you a number, it's difficult because most probably the values which have been let's say released recently, one may question whether they have taken a very prudent approach on them. Because they will have no problem at all to come up with better figures or revised figures in a very short period of time.
But you know,
it depends how they have approached this valuation exercise.
So no number from you, Vincent?
Tell you better to be prudent today and more optimistic. Numbers.
Okay, so what's the number?
-7.
Sorry? Oh. He's
minus
gone.
10, I heard.
Minus 10.
-7.
-7. Okay. Because, you know, it's important, as we say in French. Sorry? No, your line is not good.
-7.
Okay. 100% des gagnants ont tenté leur chance. Laurent?
I would be more granular. I think it would depend on the industry. I think there will be losers and winners, that's for sure. So the funds that are in the good industry, which we mentioned earlier, they will certainly, I think, very, very significant gain, and this is going to be a very good happy end. And they're very much on the spot, and there are a few of them. So that's on one end, and I would say so very, very significant gain. On the other end, the losers, the one that unfortunately were in those industry that most likely that has frozen basically over the last months. I don't see those sector picking up until the end of the year. So this is going to be significant losses here, minus 25, I would say. So more contrast between one and the other, I would say.
David? Yeah, so you stay with your number, and Nick, you said in the end?
I never said the number, but I'll go for 12%.
Okay, so it's not a disaster. And one big distinction I want to make as well is, you know, there's been a lot of money raised. So for these funds that are now investing and probably will delay their investments towards the end of the year, probably we're going to see some of the best vintages, huh? We should look back at this in September. I want to move to the third section of our discussion, which is going to be shorter than last time. And please, for the viewers who are very numerous today, do include your Q&A questions in the little chat box. Looking at Luxembourg, so you as big firms, advisory firms, you have contingency plans in place. You've been used to this new way of working. We used to say that in Luxembourg, banks are in a good position and maybe it could be part of the solution, which is what Vincent was hitting at in April. How is your firm looking, and how do you value what the government's been doing for us and the CSSF coming together? Please, some qualitative commentaries on this. Maybe Laurent first?
Yeah, I think the government has done a great job. The crisis has been handled, I think, has been very good. Obviously, we are smaller than others, so it makes things easier. But I think overall, the way that's been handled is very good. Key highlight from my end is the massive testing plan that will be implemented 19th of May. I think we can be very proud. To me, it sounds a very good way in having our economy recovering, you know, quick enough. Same thing with what happened, you know, end of April, 20th of April, when the construction were authorized to work again. So I think we've been quite proactive in dealing with the crisis. I think overall, from a government perspective, timing is key. So it is about, you know, doing as much as we can now to go back to work, so that the economy does not suffer too much and we don't end up in that situation of you know, snowball effect and starting with some bankruptcy that kind of taint the rest of the economy. Maybe one point that I think about is that we probably, my advice would be not that transform Luxembourg as a fortress. And we talked about recruitment earlier, so we should obviously continue to welcome neighbor country member states in Luxembourg, so for our recruitment, but also outside EU. Mm-hmm. So I think we need those talents to continue to contribute.
So your EY is hiring as we speak?
EY is hiring, yes, of course. So we are, I think the four of us keep hiring in the broad sense, because I mean, if you think about on the audits, this is a very resilient business, and there's still a lot to be done. So yes, of course, we keep hiring. We want to be cautious and prudent overall, but obviously, yes, we oh wow,
that's good. That's great news. We will relay that to our young talent. And David, what about KPMG?
About KPMG, yes, we still keep on hiring for September, and hopefully we'll be able to welcome our new people in the building. Not yet sure yet how we will and when we'll be back in the office. Now, coming back to your question about did the government do a great job? And I fully agree with Laurent. If you just look at the KPIs, which I did over the weekend, you can see that in Luxembourg, the average age of people who passed away because of the COVID is 83 years old, which is actually above the EU average. So I know we are a small country, it may be easier to manage, but looking only at these KPIs, definitely the Luxembourg government did a great job. Now the major challenge will be once the border, I mean, they are still open, but once the commuters will come back into the country on a regular daily basis and see how we will and how they will be able to manage that. Mm-hmm. They may also need to come back with incentives, tax incentives, or other kind of incentives to allow, I mean, the business that suffered the most to be able to cope with
well, that's a very positive message. Nick, how is Deloitte looking at future hires and the situation with the government support measures? I mean, 50% of GDP is a big number for sure.
So we're still recruiting. I think it's as is common in the thing, cautiously, obviously, still looking at what's going to happen. We don't have a crystal ball in terms of what's going to happen, but the recruitment definitely did not stop, as it is something important and key for us in that respect. The funny thing that we had to adapt to is also onboarding people in a remote manner, which was a first. We'd obviously welcome them on a welcome day physically in the office, which is something we could not do for the recruits that we had over the last few weeks. And as David mentioned, hopefully the recruits for September, October will be able to be done.
So you are welcoming newcomers in their homes, in the office?
Yeah, virtually.
Okay, we want to see this on a movie.
Life is changing.
Of course. And Vincent, what about you? Is PwC still hiring? And what do you think of what's the measures that have been taken in Luxembourg?
Still hiring. Maybe we will be a little bit more, let's say, selective. You have seen our managing partner, John Parker's message that we will not request the aid of the government. Our decision is also to actually keep our people, even if this means an impact on remuneration for everybody from the top to the bottom. So we do everything, and then we'll see for the rest, actually.
But I hear all wonderful messages from all of you that, you know, first of all, how you look after your people, how the government or public authorities work hand in hand with our private firms that you represent, and also that you're really trying to preserve employment, which is wonderful. And I think it's a tribute to how Luxembourg indeed has been dealing with the crisis. So before I let you go, I will check that we have a couple of questions, and I would like to do a little game with you. If in turn you can answer with one word, short or long, the different kind of concepts that I'm going to bring to you. It used to be a Financial Times column, which was very appreciated by the readership. So I have 7, 8 concepts to put to you, and just say long or short. So remote working. Vincent.
Long.
Yeah. So who said long?
Long.
Okay. Just go all of it. Anybody short?
Long. Long.
Okay.
It works very well.
Yeah, well, although I see the internet today is a little bit lazy on our side. What about green finance?
Right.
Long, very long.
Long as well. Yeah. More than ever.
Extremely long.
Private debt?
Short, long.
What kind of answer is that?
Neutral.
Neutral, okay.
It's there today and there to stay, I think.
Depend on the strategy, Raja. Yeah, depend on the strategy that is pursued.
Yeah.
Okay, distressed?
Long for now.
Long for now, indeed.
Yep.
Okay, US dollar?
They have the biggest printing machine in the world, so long.
It will survive.
Yeah.
The euro?
Depends what will be happening at the EU level.
I think this month is crucial.
This one is what?
This month is crucial, I think,
yeah.
in terms of decisions they make. But I'm positive personally.
So we'll send you a survey to complete online and send us back your answers after this month. China.
Short.
It remains the biggest economy in the world. So
long or short?
I'm long because they are recovering much better than anyone is expecting.
Laurent?
Yeah, I would say resilient country. Maybe exports will decrease a little bit, but still a very, very, very high also internal market. So I would say long overall.
I would have liked to ask then about globalization, which is the corollary to this, huh? Globalization?
It will still be there in my mind, but it will change. It will be modified. It's not the globalization of looking for cheap locations to manufacture, etc. anymore, but it's strategic and supply chain driven.
Okay. And last but not least, retailization of PE. Remember, we were all over the theme until recently that more and more private banks and high net worth are coming into private equity. So after this, yes or no? I mean, long or short, I should say.
Certainly long. I think there's lots of interest in the real economy for many people, and I think it's uncorrelated. So I would certainly say long.
I agree.
So that means you are long private equity in general, and you expect our industry to continue to perform well, because when we are interviewed by the media now as LPEA, we are asked if private equity is going to be resilient to this crisis. And of course, we always come up with prudent arguments, but also positive ones like the cash and the lessons that we learned from the previous crisis. So you agree, all of you, with this, huh?
Yeah. It has survived the many downturns in the past, and it continues to reinvent itself. So
I'm very impressed, because somehow I feel, compared to last month when we spoke, you are more, I don't know if I want to say more optimistic. I still want to call you realists, but it's definitely good to hear that the stance is very comfortable and confident. And when you're back in September, or maybe in the summer, because I'm not sure we can all go on holiday this summer. We may do this in the middle of August for once.
We can go, but not far away.
Yes, so we'll see when we have you back here, guys. But this was extremely, I think, eye-opening, and I learned a lot. So unless you want to say something to wrap it up, we'll let you go, because I know our audit specialists here are still closing the yearly accounts of their key clients. And for those who are watching, please go to our YouTube channel. Feel free to send questions separately. And the next event we'll host will be tomorrow on family offices and their appetite for venture capital. So thank you, the Big Four. Stay as big and as cool as you are, and see you back here in a few weeks.
Ciao.